This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil stockpiles fell unexpectedly last week as refining activity ticked higher, while gasoline and distillate inventories posted surprise builds, the Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 2.3 million barrels to 430.2 million barrels in the week ended February 21, the EIA said, compared with analysts' expectations in a Reuters poll for a 2.6 million barrel rise. Stocks at the Cushing, Oklahoma, delivery hub for U.S. crude futures, however, rose by 1.3 million barrels to 24.6 million barrels, their highest since November.
Oil prices climbed for the first time in 3 days on Thursday, with supply worries resurfacing after U.S. President Donald Trump announced a reversal of a license given to Chevron to operate in Venezuela. Brent crude oil futures rose 24 cents or 0.33% to $72.77 a barrel by 0328 GMT. U.S. West Texas Intermediate crude oil futures were up 18 cents or 0.26% at $68.80 per barrel. A day earlier, the contracts settled at their lowest since December 10 due to a surprise build in U.S. fuel inventories that hinted at weakening demand and hopes for a potential peace deal between Russia and Ukraine. Both benchmarks have lost about 5% so far this month.
Moving on to the top news in the energy sector.
China's rapid solar expansion is expected to slow this year for the first time since 2019, as the industry's growth moderates, according to an industry association forecast on Thursday. New solar capacity added in 2025 is expected to range from 215 gigawatts, GW, in a conservative scenario to 255 gigawatts in a more optimistic outlook, said Wang Bohua, honorary chairman of the China Photovoltaic Industry Association. Wang attributed the expected slowdown to 2024's high base and the introduction of a new power pricing mechanism in June, which will require new renewable plants to sell power on a market basis. This shift is expected to complicate future revenue forecasts and increase uncertainty for investors.
The European Commission plans to loosen its rules on corporate sustainability reporting and supply chain transparency, it said on Wednesday, in a bid to make Europe more competitive with the United States and China. The plans, or Simplification Omnibus, are part of a wider package of reforms aimed at helping Europe's companies, and they also include incentives to encourage industry to decarbonize and measures to lower energy costs. European businesses may cheer after long complaining that tight regulations and bureaucracy hampered their ability to compete globally, but opponents of the new deregulation drive said it guts corporate accountability. Next, we have the top news in metal markets. London copper prices dipped on Thursday, tracking a firmer dollar as uncertainty lingered around U.S. President Donald Trump's tariff plans. 3-month copper on the London Metal Exchange edged 0.5% lower to $9,416 a metric ton, as of 0356 GMT, after rising 0.2% on Wednesday. The U.S. dollar firmed above an 11-week trough as vague pledges from Trump to impose tariffs on Europe, and further delays to levies planned for Canada and Mexico stoked uncertainty. A stronger dollar makes commodities priced in the U.S. currency more expensive for buyers using other currencies.
Iron ore futures prices dropped more than 1% on Thursday, pressured by escalating tariff measures against Chinese steel and an increase in iron ore imports into top consumer China. The most traded May iron ore contract on China's Dalian Commodity Exchange ended morning trade 1.05% lower at 803 yuan, $110.48 a metric ton. The benchmark March iron ore on the Singapore Exchange was trading 1.4% lower at $104.40 a ton.
We will now look at the top news in the agricultural sector.
Chicago wheat futures extended declines in early trade on Thursday after tumbling more than 6% from a multi-month high hit last week, as it became clear that Northern Hemisphere winter crops had got through a period of cold weather without damage. Corn and soybean futures rose slightly, but were stuck below recent highs, with prices of all three contracts under pressure from renewed fears that tariffs will ensnare agricultural trade and dampen global demand.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.